so far, if you look at the data, all global recessions have historically been US-led global recessions in the past. China now is the biggest risk. And why? This is what Ruchir points out. Look at the 20 years from 1990 to 2009, the contribution to global economic growth by America was 30% and China only 12%. So we'd say when America sneezes, the world catches a cold, right? Now look at what's happened. This is Ruchir's data. 2010 to 2015, the US is now only 17% of global growth. That's their contribution. But China is 34%, twice as important as the United States in its contribution to global growth. So when China sneezes, we're in trouble now.
Yes, I think that's the big change, which is that the Chinese economy has become very large, and that cuts both ways. So it's been a big contributor to global growth. But now, because a lot of its growth in the last few years was facilitated by record levels of debt, that has become a source of vulnerability for the global economy now. So the issue the world faces today is that the Chinese economy is extremely vulnerable after this debt binge that it was on the last decade. And its size is so big that now China is more than 10% of global economic output. And that's a real problem.
Actually, that was the remarkably important thing about your writings and what you said here last year about the importance, how significant China is, that China is not only in trouble, but it's such a major player. And just as you were saying, what's wrong with China today? This is what Ruchir has been writing about, and in a nutshell, this is the key problem. China is most indebted among developing nations. That's a key difference. Now look at that. Debt as a percentage of GDP. China, 280%. India, 120. Brazil, even 160. And Indonesia, very low and very comfortable. Of course, the higher the per capita income, you can afford more percentage debt as a percentage of GDP, and China is higher GDP per capita income than us. But still, 280% is wild, but that's not the only issue you pointed out. You found that there is a critical point. It's been on a debt binge. It's the sharpest rise in debt, not just the level actually, that you can take levels, but if you hit that 40% mark, where your debt is 40% of GDP, if it grows by more than 40% in GDP in 5 years, that's a dangerous thing. And look at what Ruchir's data shows about China. In the last 5 years, it's grown by 72%. Debt, the increase in debt by 72%. How does that 40% come about?
Right. That's something that we carried a lot of research for post the global financial crisis of 2008 and 2009. And here are two things that we found. One, the single most important predictor of both financial crises and sharp economic slowdowns is when a country takes on too much debt over a short span of time. And what we found here was that that span of time is about 5 years or so. That if a country takes on too much debt
in 5 years,
yes, over a 5-year time horizon, then for the next 5 years, the country pays a major bill for that.
Wow.
And I think that
and
why does it happen?
How many countries did you study for this?
Right. So we, two things here that we studied here. Tons of countries, and what we found was that there were about 30 countries where debt as a share of the economy increased by 40 percentage points or more over a 5-year time horizon.
Right.
And these 30 countries, they all saw two things happen to them in the next 5 years. One, that there was a very sharp slowdown in economic growth.
Right.
And typically economic growth more than halved in these countries.
Right.
And the second thing is that many of these countries faced a financial crisis. In fact, about 70% of these countries faced a financial crisis.
All of them who had a 40% increase in their debt or immediately faced a crisis in the next 5 years.
Yeah, and not all of them. They all faced a major economic slowdown, and 70% faced a financial crisis in the next...
Slowdown, and some got even worse.
And why does this happen? It happens because when you lend out too much over a short span of time...
Trying to push your GDP.
Yes. You end up making bad loans because the system can't absorb it. You don't know who the borrowers are, what their credit history is. And that's what China did. That until 2008, 2009, China's debt profile was quite stable. And so therefore all of us were quite optimistic on China. But after the global financial crisis, as they tried to maintain a very high growth target, that's when they went on this debt binge, and now are really paying a price for it, because there is no free lunch. You borrow a lot from the future, you have to pay a price for it. And I think that's the phase that China currently is in.